Axis Bank gains in trade on the back of its September quarter numbers. The bank posted a strong loan book growth and net interest income beat, but profit took a one-time hit on account of provisions. The stock up 2%.
Shares of KEI Industries, it's down by close to around 5% post their quarter 2 numbers. The company's revenues falls a little bit short of the street estimates. The management, however, tells CNBC-TV18 they expect the second half of the year performance to be strong, with exports scaling up.
HDFC Life trades under pressure as the company's second quarter new business premium falls short of estimates. Management tells CNBC-TV18 they expect margin acceleration from FY27 onwards.
And shares of Quick Heal, they trade higher after reporting of 46% revenue growth sequentially. The company also turned to profit in the second quarter of FY26.
Shares of Oberoi Realty too higher by about 4%. The company's profit jumps 29%, demand driven by strong demand across residential and commercial projects.
Well, hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And as we've been saying in the last few days, this market has turned pretty much into a buy on dips market, after we started taking out those crucial resistance marks. And importantly, the September high as well has got taken out, Mangalam. So, went with green today and happy to see that I am matching with the market.
Absolutely. Good numbers coming in. I'm wearing grey today, but the only thing I can say is that grey clouds have been moving away from the market right now, and there is a fair amount of green. That's all we can say about it. But
Mangalam, besides the markets, one key aspect we're going to be looking at is going to be earnings.
Yep.
And I believe you are setting us up for the FMCG numbers. So let's hear about the quarter tak for FMCG.
Yep, let's do that. In fact, what I can tell you about the FMCG numbers this time around ahead of Nestle's results is that it's a quarter where there will be a fair amount of transition. So you just move around and look at, how the street is expecting the setup to be. It's a quarter in transit, largely because in the first half of the quarter, there was higher than expected rainfall in some parts of the country. In fact, there was flooding in some parts of the country as well. So as a result of which, there was some weakness in demand. GST cuts were announced with effect from September 22nd. So as a result of which, some destocking impact as well would happen. But the good part, Tier 2 and rural growth has actually outpaced urban, which has been facing a bit of a slowdown, but gradual improvement is what we're seeing out there as well. So this is a quarter, which is a quarter in transition. So what we need to watch out for would be loss in primary sales due to GST transition, demand commentary in the third quarter, and stability in key raw materials. Apart from all of this, we'll also watch out for a couple of leadership announcements, strategic leadership announcements, because for HUL is the first quarterly performance under Priya Nair, and for Nestle also under Manish. And finally, consolidated business growth for HUL will be flat to low single digits. So that's the one company. Among the others that have reported their updates so far, Godrej Consumer, mid-single digit revenue growth, EBITDA declined year on year, and that's largely on account of the GST-related transition. For Marico, strong double-digit constant currency growth for their international business, but overall growth has been coming in at near 30s. So that's something we will most definitely watch out for. For Dabur, consolidated revenue growth in mid-single digit with margins which are maintained. So bunch of companies are on our radar. Retailers, however, they've had a reason to cheer as the early festive season has boosted footfalls. V-Mart's same-store sales growth up 11%, V2 retail up around 23% as well. And it's been a glittering quarter for all the jewelry players, led by a sharp surge in the prices of gold. And all these stocks are well bid even in today's trading session. So Titan saw 19% on that base growth in their domestic jewelry business. Kalyan Jewellers as well, 31%. But if you look at the overall expectations, analysts expect varied performance across the board. So for Asian Paints, the revenue is likely to decline 2 to 3%, EBITDA likely to improve by about 8 to 10%. Tata Consumer would be one of the stocks I'll be watching out for, 15 to 17% top line growth with a slight decline in margins. Britannia, the impact of GST transition would be felt most on Britannia, so that's something we'll be watching out for. And even Nestle and Colgate, the worst performance this time around may come in from Colgate. But apart from all of this, the three numbers that I'll be tracking personally very closely is one, trend, because we already have the second quarter update. The stock has seen a bit of a correction. Post the actual numbers, could we see a turn in sentiment or not is something they will be watching out for. Trend. For Tata Consumer, how does growth pan out is something we'll be tracking. And finally, for Eternal as well, management commentary. For the FMCG sector, valuations have always remained rich, and this time around as well, not too different. But the only solace that one can have is that the current valuations are a lot lower than 5-year average valuations, even though the current profitability growth and revenue growth have been lower than 5-year compounded averages as well. So it's a quarter marked by transition, tempered growth, and a plenty of hope riding on the GST cut-led festive rebound ahead. In fact, as we speak, we also have Abneesh Roy, who's the Executive Director, Nuvama, for Consumption and Research, joining in. Abneesh, it's a quarter which is in transit. What is it that we can expect in terms of outperformance from a couple of companies, and the one or two things that you'll be watching out for from management commentary?
Yeah, thanks. Good morning. Yes, today the FMCG results will start, and Nestle clearly under Mr. Manish Tiwari, this will be the first quarter. So from a top tier performance in Q2, we expect Bikaji Foods, Marico, Tata Consumer, Pidilite, United Spirits to be the star performers. And laggards clearly wherever the high rains have impacted and GST impact is on the higher side. Such companies will be Imami, Colgate, United Breweries, Varun Beverages, Godrej Consumer, etc. Coming to Q3, my sense is we will see good news coming back. See, Q2, as Mangalam highlighted, is not the right quarter for staples, especially because first 2 months there was a recovery. But from September 6 to September 22, there was a 4 days kind of an average impact on the sales because of the GST transition. So basically, whatever number comes today and next 2-3 weeks, basically there will be almost -4% kind of impact because of the GST transition destocking. And that's why that's not the right number to look at. We do see in Q3 grammage addition coming in lower unit packs, affordability in the bigger packs, and of course, some level of restocking will happen. So our topics will be essentially the food companies. We like Bikaji, we like Britannia, Nestle, we also like Hindustan Unilever, and discretionary we like definitely United Spirits. We also like Asian Paints and Pidilite. So those
Got it. Surprising that you like Asian Paints right now, because most on the street are still, not very positive on Asian Paints, given the sort of disruption that there is right now. But I take your point, Abneesh, not the perfect quarter to look at, but the third quarter will be extremely crucial. Volume growth expectations. What are your volume growth expectations from the second half of this year, largely because there would be that additional grammage impact coming in as well? And what are your margin expectations? Because even though raw material prices are volatile, they've not seen a big surge. Do you see any room for margin expansion from here on? And how are all of these, when you look at the valuations, how are these placed for the entire pack on the whole? Because valuations, while they're lower than their 5-year average, they're still, pretty much in line with the sort of performance that we've seen over the last 3-4 years.
Yeah, good question. See, from a GST 2.0, clearly from a food companies, I think the impact is on the higher side in terms of benefit. So that's why Britannia, Bikaji, Nestle will be the bigger beneficiary. The simple reason is the 5 rupee, 10 rupee pack grammage addition happens, and consumer buys a pack of, say, bhujia or a biscuit. He doesn't buy a grammage of, say, 100 grams. So the real consumption boost will be there in such packs. Unlike that, in Colgate, if you see, yes, 30-40% of Colgate is also lower unit pack. And initially, they will also see the grammage benefit in those packs. But in a 1-year perspective, those things will normalize. In toothpaste, that's why I don't see too much of a direct benefit of GST 2.0. On the flip side, Colgate can see some impact of the inverted duty structure. So coming to margins, it's a function of operating leverage, it's a function of raw material, and it's a function of GST 2.0 inverted duty structure. That's why I'll be cautious on Colgate. In terms of benefit, I think clearly operating leverage benefit will come in Britannia. My sense is Britannia can touch double-digit volume growth also in H2. So basically from October 15th is where I think the recovery for FMCG, restocking and the normalization is going to happen in most of the categories. So that's why Bikaji, Britannia, Nestle will see a good uptick in terms of volumes and some level of margins. I don't think companies will retain any GST benefit, but operating leverage benefit will come for Britannia, Bikaji, Nestle, etc. in H2. So yeah, we are positive on those 3 names from a valuation perspective also.
All right, it's Diwali. So let's talk about the drinks. What do you like out there? We have a trailer coming in, I think, from JM Breweries as well. Those numbers look good. Obviously, it's on a smaller base. But how you approach this space? Are you enthused?
Yeah, we are seeing a trend reversal there. So in United Spirits, if you see Andhra and Karnataka really firing, and in Q2, those 2 markets have really helped in spite of decline, almost high single-digit decline for spirits companies in Maharashtra, and some companies double-digit decline in Maharashtra. Karnataka and Andhra are making up. And from a H2 perspective, you're absolutely right. Disposable income will definitely increase. And that's why I think spirits companies can benefit. Second, of course, is United Breweries. Q2 will be quite weak because of the very high rains. We expect -2 India volumes. In fact, in H2, we expect recovery there because Maharashtra, as I said, spirits is seeing almost double-digit volume decline. Beer is starting to see the benefit. It has not come in Q2. It will come in Q3 and Q4. So we are positive on United Spirits from a Q2 H2 perspective and United Breweries from a H2 perspective. Q3 will be weak for United Breweries.
Okay, cheers to that, Abneesh. Always good to hear your thoughts. You're optimistic on Asian Paints, United Spirits as well, and mixed trends coming in for the FMCG pack. We look forward to hearing from you as the numbers start hitting the screen, Abneesh. But thanks a lot for joining in today. Well, let's slip into a short break. We'll focus more on the markets as well as on stock-specific action. Stay tuned.
The market continues to do well at the high point of trade now, firmly above the 25,450 mark as well, closing in on that 25,500. Can it happen in the next 20 minutes or so? If Chartbusters does it, we'll take the credit for it. But if not, then, we've still taken the credit for the up move that has taken place. But among all the secondary market listed stocks, we have had a new listing today as well, and that's Rubicon. A good move, 25% versus its issue price. So good going. We have Parag Sancheti, who's the Executive Director and Chief Executive Officer of Rubicon Research, joining in. Thanks a lot, Mr. Sancheti, for joining in. And more importantly, it's a momentous occasion. 25%, up move over and above your issue price, irrespective of the price move as well. In a company's lifetime, being listed on the bourses is a momentous occasion and a milestone. While it, is a milestone, it's also a crown of responsibility that you have. And the first thing that the street will be eyeing when it comes to responsibility is sustaining your over 70% growth rate in the revenues. Over the last 3 years, your revenues have compounded over 70%. Do you think this is a pace that can continue over the next couple of years, or do you see this moderating?
Yeah, thanks for having me on the show. And indeed, this is a momentous moment for us. As a promoter family, our employees, all the people who've been associated with the company. So really excited about the new phase in the public markets. We'll continue to do our best. Our performance and we'll continue to keep on focusing on our execution and our research and development. And that's what we can do and move ahead in the right direction by selecting the right products and executing and getting approvals on the right time.
All right. Yeah.
That's, I think, what the direction is.
All right. Hi, Parag. Now that you're listed, first we'd like to congratulate the entire team. Market capitalization at around 10,000 crores. Wow. On the first day of listing. So good going on that front. But now you're at the liberty of giving us some kind of an outlook. And you could quantify it as well. So revenue growth trajectory, what could it be? Give us a broad band, Parag. And also margin trajectory has been improving. Q1 was better than what you saw last year. Do you think there is scope for margins to improve?
So I think, as I mentioned, I think we'll continue to focus on execution. I think we see many opportunities in the market. I think, and we have a great team to execute on the plans we have laid out. And we continue to work around that plans to ensure that we continue to grow in a healthy way. And as we go ahead in the later part of the year or the next year, I think our plans, our launches are already kind of in progress. So we're very, very confident of the way the company is going to grow ahead.
All right. What about margins? You give us some numbers, Last year, you did about 20% in margins. Do you think you have the room to take it further to 21, 22, 23%? Because the rate at which you're growing revenue, I'm sure at some point the operating leverage will catch up as well, right?
Yeah. So there are lots of operating levers in the business which are there. And obviously, we don't want to guide to a, as you know, understand we're a new listed company, so I think we want to definitely meet or beat the expectations the street has. So I think don't want to put a number to it, but I think there are multiple operational levers to our business, including launches, a new plant coming on stream. So a lot of other, launches, a lot of our specialty business growing. So a lot of operating levers. And as we look at utilizing all of them, definitely we see directionally a very, very positive sign towards growth in that sense.
All right, Parag, you're keeping it very, very sleek. You're not trying to give us any kind of numbers. But I want to ask you directionally, since you're talking direction, last year your net profit was around 135 crores. Now, because the debt comes down, you save ballpark 32 crores of interest cost. And going by the kind of rate that you're growing, do you think you're in for your PAT number to move from around 135 crores closer to around 270 to around 300 crores, which would make the stock trade at around 35 times, 270 to around 300 crores net profit possible directionally in the next 2 years?
So I'm sorry, but directionally, I think we will go as per the plan we have. And
What
as
is
I
the
said,
plan?
the
Let's
operating
keep it
levers.
simple. What
I
is
think,
the plan that you have?
As I mentioned, not at the liberty to disclose it as we are just getting listed as a listed company. But as we move ahead in the direction and we go in this journey, I think we'll definitely work towards a broader guidance as we move to, and our business, as you know, is a R&D based regulated markets business. So I think as we move in the listed journey, we'll definitely come out with something more directional and more substantive to give you. But as of now, I would say, multiple levers. I think everyone can work out what the numbers could be. But I think we are obviously working towards that plan which we have internal, and
Right.
I think move from there.
All right, Parag, thank you so much for joining in. We wish you good luck for
Thanks
the
for
future
that.
and the long term for the company as well. And as people who've been, speaking with listed companies for a while now, the limited experience both Nigel and I bring, we can tell you that if you can guide the street and meet those expectations or beat those expectations, there's nothing really to worry about from a regulator standpoint. Regulators start to get worried only once you start over-promising and start giving direction to the stock itself. So you can always rest assured, focus on your business, give us realistic numbers, and perhaps attempt to beat them or meet them. With that, good luck for your journey in the listed universe. We take a short break, come back, get you more of the markets and a lot of stock-specific action.
Welcome back. As you can see to the top of the screen, Mangalam and me have been the good luck charms, all the 4 indices in the green. But we'll have a wrap up on this edition of Chartbusters. The team of Trading Us batting up and coming in to take center stage. Stay tuned.